Good morning, sir.
Okay,
Morning,
so
sir.
this morning we shall be looking at taxation of estate, trust, and settlement. Taxation of estate, trust, and settlements. So basically, the summary of this topic has to do with how do we tax the business or the property of a deceased person. Take for instance, Mr. XYZ was late in 2021. Before his demise, he has a business, a property that is generating revenue, and he's paying tax on those property. But after his death, the business still continue. Since the business still continue and they are still making profit, that means we are still going to tax them too. So how do we now tax the estate, the business of these deceased persons? How do we tax them? That is what this topic centered on. So what kind of tax, what kind of income will be subjected to tax? Who are the beneficiaries to the business of the deceased persons? And so on like that. So that is what this this topic centered on. We start by definition of relevant terms. What are the relevant terms we need to define? First, we need to define what is a trust. A trust simply means an arrangement or equitable obligation binding on a person called trustee to deal with property over which he or she has custody for the benefit of a person called beneficiary. Let me explain it in a layman definition. Trust simply means an arrangement whereby the property and asset of deceased person is managed or administered by a person called trustee for the benefit of who? For the benefit of a beneficiary. Beneficiary, they are the children of the deceased person. They are the children of what? Deceased person. So these are the beneficiary. So trust simply means an arrangement whereby the assets or the properties of the deceased person is being managed by an appointed person for the benefit of who? For the benefit of the beneficiary. What is settlement? Settlement simply means when part of an asset or properties of the deceased person is transferred to another person under the trust arrangement. Settlement means an amount or asset set aside. An amount or asset set aside from the property of the deceased persons for the benefit of another what? Another persons. That is called settlement. Who is a settlor? Settlor means the persons that benefit or that inherit the property of the asset of the deceased person. This is what settlor. What is an estate? An estate means the aggregate of the properties or assets of a person during his lifetime or on his death. The aggregate of the property of a person during his lifetime or on his death. The aggregate of a property or assets of a person during his lifetime or on his death. That is called estate. We have another one called annuity. What is annuity? Annuity means a fixed amount of money specified in the trust deed paid to a beneficiary or to someone until death. Let me explain. When somebody is late, that person can late without a will, or he can late with a will. That means that person has write his will. In his will, he may write that so amount every year from this business should be paid to my children, or should be paid to my brothers, or should be paid to my sisters. So that fixed amount stated in the will, that fixed amount stated in the will that it should be paid to the beneficiary, it is called annuity. The fixed amount stated in the will that it should be paid to the beneficiary, it is called annuity until that beneficiary too is late. So anybody that received that annuity, that fixed amount from the estate or from the property of the deceased person, those people that receive the benefit, the annual payment stated in the trust deed, it is called annuitant. In this topic, the deceased person may stated in his will that after his or her demise, the property should be managed by somebody. In that case, if it is stated in the will that the property should be managed by so person, in that case, that person appointed, that person is a trustee. The person appointed in the will to manage the property of deceased person is called trustee. But assuming the deceased person did not write his will, and he just died without any documentation, in that case, the court of law can appoint somebody to manage the property, and the person appointed by the court of law is called administrator. Administrator. Another terms that we should look at is life tenant. Who is a life tenant? Life tenant simply means a person who has a right to the income or property held in a trust for life. Life tenant simply means a person who has a right to the income or property held in trust for life. That is what a life tenant. That person who has a right to the property held in trust for life. Let me explain that in a layman. That deceased person, while writing his will, he has stated that one of the 2-bedroom flats that he owns in Banana Island is presently occupied by his brother. After his or her demise, you people should not pursue the brother. The brother should be using it until that his brother is late. In that case, that property is not will to the brother. that his brother is a life tenant. The brother will still be using the property while the brother is still alive. But after the brother is late, the property will be taken over by the trustee, which is the somebody that managed the business of the deceased person. Mr. A has a brother. His brother name is Mr. B. His brother is staying in one of the property of Mr. A in Banana Island. After Mr. A is late, he has stated in the will that, please, so this property that my brother is staying on, I did not give it to my brother, but you people don't need to evacuate my brother. You people don't need to pursue my, to inject my brother from the property. Let him be using it until his death. In that case, that his brother is a life tenant. After the brother is late, the property will be taken over. That is a life tenant. We have another one called administrative period. Administrative period. What is administrative period? Administrative period means the period between the date of death and the date in which the executor is able to set up the trust. Administrative period means, administration period means the period between the date that property owner is late, that business owner is late, and the up to the time when the property is being handed over to the trustee. That this trustee will be the one to manage the property. That is administrative period. That is administrative period. Now, what is a will? A will is a document made by a person as to how his assets should be distributed at his death. A will is a document made by a person as to how his assets will be distributed at his what? At his death. That is a will. Now, let's look at taxable persons under trustees and settlement. Who are the taxable persons? Who are the persons that will pay tax under trustees and settlement? Who will pay tax under trustee and settlement? Who are the persons liable to tax? Number one, from the children of the deceased person, every year we will be giving them some certain sum of money. The children of the deceased person, every year they will be giving some certain sum of money. That certain sum of money given to them from the estate, they have to pay tax on it, like annuity paid to them. They will pay tax on it. So, under the taxable person, under trustee and settlement, first person is the beneficiary or annuitant. Second person, trustee. Trustee is going to pay tax on the remainder income. Remainder income means income remaining in the hand of trustee after he has shared money to the beneficiary. Take, for instance, the business, they make a profit of 500,000. That business of the deceased person make a profit of 500,000. And it has already stated in the will that any profit made by the business, 50% of it should be shared among the beneficiary, which are the children. Assuming the beneficiary share the 50% of 500,000, that means they will share 250,000. 250,000 will still remain in the hand of who? In the hand of trustee. In that case, that 50% remain in the hand of trustee is going to be, trustee will pay tax on the 50%. Trustee will pay tax on what? On the 50%. The trustee will pay tax on the 50% remaining. That is remainder income. Another taxable person is called settlor. Settlor means somebody that has right to the income of the deceased person that is stated in the will. It's not the direct family, it's not the children, but maybe it's one of his relatives or one of his business partner. That one too, he normally share income from the deceased person. In that case, that person is called settlor. That person too will pay tax. Now, what are the basis period for assessing the income of the deceased person? The basis period. What are the basis period for assessing the income of any trustee? What are the basis period? We use preceding year basis. We use what? Preceding year basis. That means the income of a last year, the income of last year will be assessed to tax this year. Any income arising from trustee, trust and settlement, any income of the deceased person is going to be assessed to tax on preceding year basis. Now, capital allowance too. We normally compute capital allowance on the assets acquired by the trustee for the deceased persons too. We compute capital allowance. But when the asset is disposed, we don't compute balancing allowance or balancing charge. When the asset is disposed, we don't compute balancing allowance or balancing charge. Another thing we need to look at is the losses. How do we relieve loss under taxation of trust and settlement? How do we relieve loss? Loss is relieved the normal way from the computed profit. We are still going to talk about computed profit when we look at the format. When the business of the deceased person made a loss, that loss too, we can carry it forward and we can relieve it against future profits of the same source. That loss too, we can carry it forward and relieve it against future profit of the same source. Now, the next thing we need to look at, what is discretionary payment? What is discretionary payment? Discretionary payment means a fixed payment made by the trustee to the beneficiary. This fixed payment made by the trustee to the beneficiary is different from the annuity. Annuity is stated in the will. Discretionary payment is not stated in the will, but the will authorizes the trustee to make discretionary payment at his own discretion to the beneficiary. So, beneficiary, they receive like 3 benefits. First, they receive annuity. Second, they receive discretionary payment. This discretionary payment in the hand of beneficiary, it will become discretionary income. This discretionary payment in the hand of beneficiary, it will become discretionary income. Another thing we need to look at is infant income under settlement. How do we treat infant beneficiary under settlement? Who is an infant? Infant is somebody maybe that is less than 16 years or 18 years. Infant is somebody that is less than maybe 12 years or 10 years, I don't know. It's different from minor. So if one of the infants, one of the beneficiaries is an infant, and he receives income from the trustee, from the trust arrangement, that income is going to be subjected to tax in the hand of the custodian or the guardian of the infant. According to the law, infant cannot pay tax, but infant will pay tax in his or her, in the name of his or her guardian. But if infant receive any income that is less than 500,000, 500 naira, he cannot pay tax. But if he receive any income that is more than 500 naira, he will pay tax, and he's going to pay tax in the name of his or her guardian. Infant cannot pay tax in his own name. Now, the next thing we need to look at is relevant tax authority. Who are the relevant tax authority in relation to trusts and settlements? The relevant tax authority in relation to trust and settlement is the State Board of Internal Revenue. But this only happens when the income is only in one territory. That means that income is only in one state. But if the income is more than one state, the relevant tax authority will be Federal Inland Revenue Service. Now, what are the offenses and penalties under trust and settlements? What are the offenses and penalties? You know, trust and settlement, they pay personal income tax. They pay personal income tax too. The trust and settlement, the person liable to tax under trust and settlement, they also pay personal income tax. What are the offenses and penalties? Failure to comply with any of the provision of the Act. There is a provision, the section 94 of the Personal Income Tax Act stated the guideline on how trust and settlement should be taxed. And if anybody fail to comply with the provision of that act, that person will be liable to a fine of 5,000 naira in the first instance, and a sum of 100 naira for every day in which the failure continue. Failure to comply with the provision of the act. Which provision of the act? That means the section 19 of CETA. If you fail to comply with section 19 of CETA. So this is one of the offenses and penalty. Another offenses and penalty, for the sake of time, when you make incorrect return, maybe you understate the income in order to pay less tax liability. That one, for making incorrect return, the fine is 20,000 naira for the making of the incorrect return. Another one, when you are doing aiding and abetting, or you make false statements, you do not understate your income, you are making aiding and abetting. This one applies to the trustee. If that person that make aiding and abetting is an individual, is going to pay a penalty of 50,000. But if the person is a company, is going to pay a penalty of 500,000. Now, for the sake of time, let's look at the format for computing taxation of trust and settlement. What are the formats for computing taxation of trust and settlement? What are the formats? If you want to compute tax liability for the remainder income in the hand of trustee, we want to compute tax liability for the remainder income in the hand of trustee. First, we need to write income. All the income together, either earned income or unearned income, we add them together. Maybe in this case, assuming the deceased person have a shares in a company. The dividend paid, we add it. Rent from his property, fees, deposit interest, miscellaneous income. The last income is business profit. That is adjusted profit. Maybe he has a business that is doing. The adjusted profit will now less capital allowance. If he less this, the remaining one. At the end of the day, we add all the income together. If we add all the income together, that is called gross income. Adding all the income together, that is called what? Gross income. You now less what? Authorized payments. You less authorized payments from gross income. Authorized payments. Number one expenses under authorized payment is trustee remuneration. Trustee remuneration. This trustee remuneration. Hello, can you hear me?
Yes, sir.
Yes, sir.
Okay. So trustee remuneration is one of the authorized payments. Trustee remuneration can be fixed or variable. If it is fixed, that means they have stated that every month this trustee will be collecting 100,000 salary, 200,000 salary. But if it is variable, that means the salary will be based on percentage of the income generated. It can be 10%, it can be 5%, it can be 20%, it can be 15%. It depends on the agreement. It depends on what is stated in the will. So the first authorized payment is called trustee remuneration. The second one is called fees annuity. Fees what? Annuity. Why the third one is called interest on debt. The fourth authorized payment is called other administrative expenses. When you minus authorized payment from the gross income, you will get what is called computed income. When you minus authorized payment from the gross income, you will get what is called what? Computed income. After you get your computed income, you will now less discretionary payments. After you get your computed income, you will less what? Discretionary payments. Once you less discretionary payment for computed income, you will get what is called net computed income. Net what? Computed income. From the net computed income, you will now less frank investment income from it. From the net computed income, you will less frank investment income. From the net computed income, you will less frank investment income. The only frank investment income we have, it is dividend. The only frank investment income we have is what? Dividend. These dividends, once we less it, the balance will be income available for distribution. This income available for distribution, these are the income available that will be shared by the beneficiary. Part of it, everything can be shared. Part can be, it is based on what is stated in the trust deed. Part can be shared or everything can be shared. Assuming they say 80% should be shared, we less that 80% that will be shared. Once we less the 80% from the income available for distribution, the balance means remainder income in the hand of trustee. This remainder income in the hand of trustee, it is the one that trustee will pay tax on. This remainder income in the hand of trustee, it is the income the trustee will pay tax on. From this remainder income, you will now less tax relief. From this remainder income, you will less what? Tax relief. The only tax relief that we have, it is called consolidated relief allowance. The only tax relief that we have, it is called consolidated what? Relief allowance. Once we less it, that will be chargeable income in the hand of trustee. You will get chargeable income in the hand of trustee. You will get chargeable income in the hand of who? In the hand of trustee. If you get the chargeable income in the hand of trustee, you can now compute your tax liability. First 300,000 at 7%, second 300,000 at 11%, next 500,000, next 500,000, next 1.6 above 3.2. You compute your tax. In the case, after you get your tax, if you have any withholding tax on some income, you less the withholding tax credit note so that you can get your net tax payable. You have done part one of what you're supposed to do. Part two now. Part two is you need to compute the tax liability in the hand of, on the income in the hand of beneficiary. Beneficiary, they are the children of the deceased person. They receive income from this estate. First, share of distributable income. That profit remaining that they share among them, assuming the beneficiary are A, B, C, D, you will write their share of distributable income. Fees annuity. The fees annuity paid to the beneficiary as stated in the trust deed. you also write it. Discretionary payment too, paid to the beneficiary, you write it. In case if any of the beneficiary have any other income outside the trust deed that is not from the trust arrangement, that is not from the estate, you can add all the other income. Once you add that, you will get total income. From getting this total income, you will now less tax relief, which is the CRA, Consolidated Relief Allowance. You can now get the chargeable income. Once you get chargeable income from each of them, you can compute the tax liability. You can compute the tax liability.
Sorry, sir.
So,
Excuse me, sir. The above 3.2 for this one, is it 20? Is 21%? It's not 24, right?
it's 24. Why did I say 21?
I'm saying 21.
Okay, let me correct it. It's not 21, it's 24.
Okay, and the other one too, sir.
Okay, thank you for. So, examinable question one. Let's look at examinable question one. Examinable question one. Oh yeah, somebody should help us read.
Chief Lion
Continue.
created a trust for his three children, Zion, Yon, and Zion. Information we extracted from the records of the trustees. Adjusted profits for the year ended 31st December 2019, 4,850,120 naira. Other income, dividend gross, 482,315 naira. Rental income, 292,830 naira. Additional information. A. Trustees' remuneration is 10% of computed total income. B. Sir, please go up. Hello, sir.
Yes, I've strolled up.
Sir, can you hear me?
I can hear you.
Okay. B. Specific. Okay. Specific legatee is entitled, and 28,910 naira from rent is for the benefit of local government school for handicap. C. Fixed annuity of 120,000 naira to a beneficiary, Mr. Okon, who served Chief Lion meticulously as his steward. D. Zion, the only amputee among the children, is to receive 720,000 naira payment. E. The trust provides that the beneficiaries are to share half of the distributable income in the ratio 1:2:1 for Zion, Eon, and Zion, respectively. Required. Roman figure 1. Determine the income tax payable in the hand of the trustee for the relevant tax year. 10 marks. Compute trustee's taxable income and the amount tax due to each child beneficiary. 8 marks. I'm done, sir.
Okay, thank you. So the name is Shiv Leon Estate. We are asked to compute the tax liability on the remainder income in the hand of who? In the hand of trustee. First, we go in this question, we look at what are the income. What are the income we have? One income that we have first is adjusted profit. That one is 4,300,000 and what? 850,000. 120. That's adjusted profit. This adjusted profit what do we normally less from adjusted profit? Capital allowance. Do we have capital allowance in this question? We do not have capital allowance. So our capital allowance is nil. So look at the adjusted profit. I call it business profit. Less capital allowance, nil, is still going to give us 4,850,120. The next one is dividend gross. This is another income too. We write that. Rental income too. We write that. The rental income too. We write it. At the end of the day, the gross income for Shivleon Estate, the gross income is going to be what? 5,625,265. 5,625,265. Can we all see that?
Yes, sir.
After that, we less authorized payments. We less what? Authorized payments. What are the authorized payments? Trustee remuneration. Trustee remuneration said 10% of what?
Computed total income.
Computed total income. %10 of it. This is the total income that they are referring to. 10% of it is going to give us 562,527. We have fees annuity. Fees annuity. How much is fees annuity?
$120,000.
Yes, 120,000. Fees annuity, 120,000. We less that too. It's part of the authorized payments. 120,000. We also less a specific legatee. This one too is an authorized payment. How much is the specific legatee?
50% of income from dividend and 28,009. Okay. For benefit of local government.
So 15% of dividend. How much is the dividend?
482,315.
182,315. 15% of it.
It's correct, sir. 72,347.
And the second one, the second specific legatee is 28,910. It is stated already. So at the end of the day, when you add all the authorized payments, it will give you 783,784. When you less it from the computed income, from the total gross income, which is the total income, you will get computed income of how much? 4,841,481. You now less discretionary payments. The discretionary payment that we have in this question, it is the amount. Note D. Zion, the only input among the children is to receive 720,000 payment. This is a discretionary payment. So you less it from the computed income. Once you less discretionary payments, you will get net computed income. From this net computed income, you will now less frank investment income. From the net computed income, you will less frank investment income. So this one, our frank investment income is still dividend. We will less it. Once we less this dividend, which is frank investment income, that means income available for distribution is 3,639,166. $3,639,166. 9,166. Once you less it, the balance is income available for distribution. The balance is income available for what? Distribution. 3,639,166. This income available for distribution, how much will the beneficiary collect from it? The beneficiary, how much?
Ratio 1:1. 1
But
to 2.
look, read it very well. Read it very well.
Okay, they are to share half of the distributable income.
That means this income available for distribution, first, they will share half of it. You will remove half of it. Half of this one, you will remove it. The half is 1,819,583. 1,819,583. When you remove the half, the balance remaining, it is the remainder income in the hand of trustee. Once you remove the half, the balance remaining, it is the remainder income in the hand of who? In the hand of trustee. This half you remove is going to be shared among the beneficiary. In the ratio 1:1. So from the remainder income, you can now relieve tax relief, consolidated relief allowance. You can remove it. If you remove tax relief, consolidated relief allowance from the remainder income, your consolidated relief allowance, 200,000 plus 20% of this remainder income.
So I don't understand how we got that less share of distributable income to beneficiary, 50%.
50% of what? 50% of 3,639,166.
But they gave us a ratio to
After
share
we
among
get this
the.
amount, see, after we get this 1,189,583, we are not going to share it among the beneficiary in the ratio. Do you understand?
Yes, sir.
And that will be in their own individual account.
In their individual account. You are right. This 1,819,583 is still going to be shared among the three beneficiaries in their individual account. So our taxable income in the hand of trustee is 1,255,667. 1,255,667. That is our chargeable income in the hand of trustee. Based on this chargeable income, we can compute tax liability. First, 300, 21,000. Second, 300, 11,000. Second 300 at 11%, that is 33,000. We have another one. Next 500, 75,000. We have the last one, the last money, the last income remaining. That is 155,667. At what percentage? At 19%. Do we understand?
Yes, sir.
Yes, sir.
So the total is going to give you 158,576. That is the total tax due that will be paid by who? By the trustee based on the remainder income. So that is that. So after that, second question said we should compute the taxable income and the amount of tax due to each children, to each child. We should compute the taxable income and the amount of tax due to each child. Taxable income and the amount of tax due to each child. How do we do that? Who are the beneficiary? Who are the child in the question? Who are the child? Who are the child in the question?
Zion, Yon, and Zion.
Zion and Zion.
Okay. Computation of tax liability on the total income in the hand of the beneficiary. Zion, Yon, and Zion. First, in the question, what are the income received by any of the beneficiary? What are the income received by any of the beneficiary?
The half of the distributable income that were shared. Now somebody is asking a question. I don't know if you can see from the chat.
Yes, the question said from the computed total income, not computed income. That computed total income means gross income. It is not computed income. That computed total income means gross income. So in this question now, the beneficiary, does any of the beneficiary receive any income?
Yes, sir.
Which one receive income?
Zion receive discretionary income of 720,000.
That is income. We add that. Aside that, this amount is shared among the beneficiary, share of distributable income. This 50%.
Yes.
Abi,
Yes, sir.
this 50% is shared. It's an income to them. What is the sharing?
Ratio
Zion
1 to
collects
1.
1/4.
1/4 times.
Zion collects 2/4.
How many? 819.
Why Zion also collects 1/4. So look at it. Under the distributable income, under the income in the hand of trustee and the tax in the hand of beneficiary and the tax liability, share of distributable income, that income that they share, you can put it under each of them. One person to collect distributable income of 720. That means each of them, their total accessible income for Zion, 1,174,894. For Yeon, 909,792. Why for the other man, Zion, 454,896. At the end of the day, you will now less, if there is no any other income, the accessible income is the same thing as the total income. At the end of the day, you will less tax relief, CRA. For the one of Zion, 200,000 plus 20% of this total income, you get the one of the first one. The second one too, 200,000 plus 20% of this what? Total income. The third one, 200,000 plus 20% of this total income. At the end of the day, you will get chargeable income for them. Their chargeable income, 739,917 for the first one, 525,833 for the second one. Why this third one is 163,917. In that case, first 300,000 for this man, 21,000, 21,000. For the other one, his income is not more than 300,000. So the first, that one too will be taxed at 7%. The third man, which is Zion, 7% of the 163,917, it will give you 11,474.
Hello, sir.
Yes.
For the first person, for the total tax liability, the person chargeable income is 739,917. For the first one, which is the first 7%, which is 21. But the other one, the second one is supposed to be for something, not 163. That I don't get that particular side, sir.
No, look at the first person. His own first 300,000 at what? 7%. Second 300,000. Can you do the second 300,000?
Yes, sir.
At 11%. 33. Can you see that?
Yes, sir.
This 163, 917 is for who?
Zion.
Is for the third person. It's not for the first person.
It's like you made a mistake from the name. You wrote Yeon 2 times.
Okay. This one is
Zion.
my friend. Hope your question has been answered.
Yes, sir.
Let me see. See, first 300,000 at 7% is going to apply to how many out of the 3?
Sir?
This first 300,000 at 7% is going to apply to how many of the beneficiary? How many of the beneficiary will collect this? Will be taxed this first 300,000? 2, 21,
The third
21.
one is not 3,000.
Because his own money, taxable income is not up to 300,000. Abi?
Yes, sir.
That is why I did the third one separate. Do you understand?
You're not supposed to pay minimum tax since his own money is less.
Okay, his minimum tax, 1% of the total income. Check the minimum tax. Is it higher than the real tax? You normally compare minimum tax with the real tax. 1% of 474,894. Is it higher than 11,474?
No, it's lower.
It's lower. That means I'm going to take 7%. Assuming 1% of that 474,894 is higher than when I use 7% for the taxable income remaining, I will take minimum tax. Do we understand?
Yes, sir.
Now, second 300,000, we only apply to who only?
The first
The
Zion.
Zion.
Zion. Because if you remove, for the second one, if you remove the first 300,000, how much is remaining?
227,833.
I will do that one separate at 11%. Do you understand?
Yes, sir.
You can ask question. No? Do you understand?
Sorry, sir. What did you do for that second person? You minus? Or what did you do? I don't understand.
Okay, if you want to compute the tax liability of the second person, this is the taxable income. Don't mind my own. How do you compute it? This 527,833, how do you compute it? You will use first 300,000, Abi, at 11%, at 7%,
Yes, sir.
21,000. If you remove 300,000, how much is remaining?
227.
That one will be at what percentage?
Okay, that's the one I don't know, sir.
It's going to be at 11%. We know the personal income tax table now. First 300,000, 7%. Second 300,000, 11%. Abi?
Yes, sir.
That 227,833 fall under second 300,000. That 227,833 fall under second 300,000. Do we understand?
Yes, sir.
Yes, sir.
Now, the third person, if you remove 300,000, you remove another 300,000. How much is remaining?
139,917.
That one will be taxed at what percentage?
That's at 15%, sir.
At 15%. Because it fall under the next 500,000. Abi?
Yes, sir.
Yes, sir.
So at the end of the day, you get the total tax liability for each of them. So let's look at one more question. Let's look at one more question for today. Okay, let's look at question 2. By next week, we are still going to solve one more question on trustee. Let's look at question 2. Question 2. Oh yeah, what do we have? For the question 2.
Explain the
Mr.
following
Uche.
text.
Okay.
Explain the following terms. Abi?
Yes.
1.
Settlements.
Settlements. 2.
Estates.
3.
Intestates. Intestates. B.
What is settlement? Settlement is a sum of money or property set aside from the estate of the deceased person for the benefit of another person called beneficiary. Estate means what? The total
Property.
aggregate of property possessed by a person during his lifetime or on his death. What is intestate? When a person dies without a will, that person died with what? Intestate. That means when a person died without a will, a person died and leave no valid will, that is intestate. Now, question B. What is question B?
Mr. Uche
Mr.
Kokuma
Uche.
was a successful
Continue.
businessman and lived in one of the major cities in the western part of Nigeria. After a brief illness, he died on February 13th, 2017. He had appointed Mr. Garba as a trustee to administer his estate. Mr. Kokuma was survived by his 4 children. The following information was made available by Mr. Garba in respect of the estate. Profit of the business as adjusted for tax purposes are as follows. Year ended December 31st, 2018, 12,500,000. Year ended December 31, 2019, 18,150,000. Year ended December 31st, 2020, 23,720,000. Capital allowance for the business as agreed by the tax authority are as follows. 2018, 2.1 million, 2019, 2.4 million, 2020, 3,450,000, 2021, 3.6 million. Other relevant information given is as follows. Each of the children, Sonny, Bengulo, Kemi, and Fumi, is entitled to 1/5 of the net distributable income. Interest on debt repayment by the trustee amounted to 255,000. Fixed annuity to a Sonny is 700,000 naira per annum. The remuneration of the trustee is fixed at 500,000 naira per annum plus 1% of computed income. The allowable expenses of the trustee amounted to 1,120,000 naira. The trustee made the following discretionary payment to the children as follows. Sonny, 660,000 naira. Bengulo, 680,000 naira. Kemi, 650,000 naira. Fumi, 560,000 naira. Required. Compute the income tax payable by the trustee on the income for 2021 year of assessment, 11 marks. B. Compute the income of the estate chargeable to tax in the hands of each of the children, 4 marks. I'm done, sir.
Okay. Now, we are asked to compute the income tax payable for 2021 year of assessment. Abi? For what 20 year of assessment?
2021.
Now, this person that is late, which income does he have in this question? Chief Ushe Kokumo, which income does Chief Ushe have? He has income from business, profit from his business,
That's
Abi?
trade income.
Yes.
Yes. So now we are asked to compute the income tax payable for 2021 year of assessment. Which of this profit are we going to take?
Trade income is based
2020.
on 50-year basis, sir.
2020 based on preceding year basis.
We are going to take 2020. That means we are going to take this. Anytime we take adjusted profit or profit, we normally less what from it.
Capital allowance.
Which of the capital allowance are we going to take? Oh yeah, which of the capital allowance?
2020, sir.
2021.
2021.
2021. Why? Because this tax year means year of assessment. Abi,
Yes, sir.
which year of assessment are we computing the tax?
2021 year of assessment.
2021.
2021.
Capital allowance, they normally express it in year of assessment. They don't express it in the year end. So we are going to take 2021. So go back to the solution now. One of his income that we have, adjusted profit, 23,720,000. Capital allowance is what? 3,600,000. At the end of the day, the gross income you are going to get is 20,120,000. You will now less authorize payments. You will less what? Authorized payment. What are the authorized payments we have in this question? That means the expenses that we have. First expenses that we have is what? The first expenses that we have is what?
Interest on debt repayment.
Interest on debt.
On debt. Second expenses that we have is what?
Fixed
Fixed annuity to Sunny.
The third is what? Trustee remuneration, Abi? Remuneration of the trustee. Fees is 500,000. They also have another one called variable, which is 1% of computed income. Why the fourth expenses that we have is administrative expenses, which is other allowable expenses, 1,120,000. So let me go and show you. Interest on debt, fees, annuity, trustee remuneration, the one that is fees. Why other allowable expenses? We have the last one, trustee remuneration, the one that is variable. The question is, how do we get this 173,713? How do we get it? How does the examiner tell us to get it? 1% of what?
1% of computed income.
Of computed income. %1 of computed income. In that case, we don't know computed income yet. Because if we want to get computed income, gross income minus authorized payment, we get computed income. But they are telling us that one of the authorized payments is 1% of computed income. If you want to do that, my people, you need to use interpolation method. What you need to do, this is gross income. Gross income is how much? 20 million. 120, Abi?
Yes, sir.
This 20 million, 120,000.
Hello,
Can
sir.
hear you, sir.
Okay, can you hear me?
Yes, sir.
Now, what I'm saying is, if he less 20 million, if he less 250,000, 255,000, 700,000, 500,000, 1,120,000 from this 20 million, 120, how much is it remaining? Use your calculator.
So I thought that is what we were supposed to do in that first question too, in order to get the computed.
No, because they say total computed income, not that one. Not.
Okay, sir.
It's not the same.
All right, sir.
So what do we have?
$17,545,000. That's what I got.
That is what we have. 17,545,000. We will now say 1% over 101 of it. 1% over 101. 1% over 101 of it. We are going to get the variable trustee remuneration of 173,713. We can now add all the authorized payments. If we add all the authorized payments, how much was the authorized payment? How much? 2,000,000 748,713, abi? If you minus it from the gross income, how much will now be your computed income? How much will be your computed income? Our
17
computed
million
income,
371
371. I
287.
want to ask a question. That variable remuneration, the question said 1% of what?
Computed income.
So 1% of the computed income now.
171713.
173. Is it the same
17.
with what we get?
Yes, sir.
Do we understand? Do we understand? Hello, do we understand?
Yes, sir.
Where I don't understand is this 1/101. I need to understand how be able to get
Yes,
that one.
because computed income, this trustee remuneration that is variable is part of authorized payment. It's part of what we deduct before we get computed income. And the examiner, he said 1% of it is 1% of computed income. We have to use interpolation method. We have to use interpolation method by lessing all the expenses before that 1% from the gross income. If he less 755,000, I'll be 255,000 from 20,120,000. We also less 700. We also less 500. We also less 1,120,000. The balance that will remain will be 17,545,000. This 17,545,000, 1/101% of it is what we are going to use. We cannot use 1/100 of it. If we use 1/100 of it, we will get it wrong. 1%. Mathematics is not taxation.
So if it is 10%, it will be 1/110.
Yes. If it is 5%, 1/105%. Do we understand? Let's go ahead. After we get computed income, according to the formula, we have to less what? Discretionary payment. And we have discretionary payment in this question. For Sonny, 660,000. For Bengulo, 680,000. For Kemi, 650,000. For the other man, Fumi, 560,000. When you add all of them together, it will give you 2,550,000. So the balance remaining income available for distribution is what? 14,800 and what? 821,000. How does the examiner tell us we should give beneficiary distributable income? How?
1/5.
They said each of the 4 children, they are entitled to what? 1 over what? 1 over 5, Abi? One over 5. Each of the children are entitled to 1 over 5. That means what that one is saying is this income available for distribution, 1 over 5 of it will be collected by each of the beneficiary. This 14,821,287, 1 over 5 of it is going to be collected by each of the beneficiary. So 1 over 5 of it is going to be 2,964,257. All of them will be collected. When you add it together, for the 4 of them, it will give you 11,857,029.60. The balance will be the remainder income in the hand of trustee. The balance will be the remainder income in the hand of who? In the hand of trustee. This remainder income in the hand of trustee, some scholar, they will say we can remove tax relief, which is 200,000 plus 20% of the gross income, which is this amount, 20% of this amount. But in some solution, they said, since the remainder income belongs to the deceased person, the deceased person cannot collect tax relief since it's late. So in some solution, why they get these 2,964,257.60, they have to less tax relief of 200,000 plus 20%. They will let in some solution. Why in some solution? Once they get this remainder income, they will not less the tax relief. They will compute the tax liability immediately. The first one I did, I less the tax relief. Look at the second one I did. I did not less the tax relief. What I want to do now is,
Sorry,
based on
sir.
this,
What does the tax law say about it?
the tax law
They will not confuse
was
somebody
not
too much.
clear
Will they still
about either, because they say that remainder income belongs to the deceased person, somebody that is late. The tax law does not clear that is the person that is late going to collect tax relief. You understand? Like other personal income we are doing, we have tax exempt, Abi, pension, NHF, Abi. But
Yes, sir.
that one cannot be applied under here because that person that is late cannot collect pension. He cannot collect NHF. He cannot insure his life. The life that is gone, which one are you going to insure again?
Well, but
So, sir,
sorry,
which one is correct?
in the case whereby the person did life assurance, when he died, it's like there will be a compensation to the family. I don't know.
Yes.
Yes,
That
that
one is different
money,
thing
will it
entirely.
be, what do you say, ma? Sir?
That one is different thing entirely.
Okay, sir.
Oh yeah,
So, sir, are you
ask your
telling
question.
us now that the correct thing is hello, sir?
Yes.
Hello. So the correct thing to do now is it to less the consolidated leave allowance or not in this taxation.
Oh, okay,
Of
based on
estate.
my own based on my own school of thought, the correct thing to do is to let the consolidated relief allowance. But even in ICAN, if you look at the question of ICAN, past question of ICAN, sometimes they will less the consolidated relief allowance, sometimes they will not less it.
Does it
Because
mean
the
now
law
that
does not claim.
the tax authority are silent about it? There's no decision on
You understand? You know, there are some issue in tax law that is not clearly stated. This is one of the issues.
then it's better to take advantage of it and take the consolidated allowance.
So, in this question now, I did not less it. That means I'm going to compute the tax based on this 2,964,257. First 300,000 at 21%, second 300,000 at 33%, the next 500,000 at 15%, the next one at 19%. If you remove 1.6 from 2,964,257, how much is it remaining? What we are going to have remaining is going to be what? 1,364,257.4. That one will be at 24%, at 21%. 21%. At the end of the day, the total tax liability that the trustee will pay on behalf of the late person, the deceased person, is going to be 510,494. The second question, we need to get the income of the estate chargeable in the hand of the children. Who are the children? He has 4 children. 4 children. First children, Sonny. Second, Bengulo. Third, Kemi. Third, fourth, Fumi. What are the income that they collect from this estate? First, they share distributable income. Each of them collect 2,964,257.4. We can see, I put it under each of them. Second, they also give them fees annuity. One of them collect fees annuity. Who collect fees annuity? Who collect fees annuity? That is Sonny. Sonny collects fees annuity. Third one, 4 of them collect discretionary payments. So what you need to do is to add the total income for the 4 of them. Total income for Sonny, total income for Bengulo, total income for Kemi, total income for Fumi. That is where you stop. Any question?
Sir, my question
Yeah.
is on the remaining what's it called, distributable income. If in the exam we decided to let's say consolidated relief allowance, are we right, are we wrong? Or if we decide to leave it like that, the way you solved it in this question?
Okay. How we said of just about 4 diet ago now, if you check ICAN past question, ICAN don't normally relieve it. They don't normally remove consolidated relief allowance from this. So let's don't remove it. That is the remainder income. Oh. But if it is the beneficiary, they are still alive. Oh, you remove it. Oh. You know, Sonny is still alive, Bengulo is still alive, Kemi is still alive. You can remove it. Oh. If you are asked to compute the tax liability. Oh. But in this question, we are not asked to compute tax liability for each of the beneficiary. They ask us to compute the income. Any other question?